Every time you start your car and turn the key, you're taking a financial risk that could cost you thousands, even hundreds of thousands of dollars in seconds. One accident, one distracted driver, one unexpected moment in traffic, and suddenly, you're dealing with repair bills, medical expenses, lawsuits, and insurance claims. Here's the scary part. The average American spends over $1,500 a year on car insurance. Yet most drivers don't actually understand what they're paying for. Are you truly protected? Or are you just paying a monthly bill, hoping nothing bad happens? Do you really know the difference between liability and full coverage? And if you got into an accident today, would your policy actually cover you or leave you stuck with a massive bill? In this video, I'm going to break down everything you need to know about car insurance in the United States. How it works, what coverage you actually need, how insurance companies calculate your premium, and most importantly, how you can legally lower your costs without risking your financial future. By the end of this video, you'll understand car insurance better than most drivers on the road, and you'll know exactly how to protect yourself the smart way. Car insurance in the US isn't just another monthly expense, it's a legal requirement in almost every state. Whether you live in California, Texas, Florida, or anywhere else in the country, driving without proper insurance can lead to heavy fines, license suspension, and serious financial consequences. But here's where things get confusing. Policies are filled with complicated terms like deductibles, liability limits, comprehensive coverage, uninsured motorist protection, and personal injury protection. Insurance companies use pricing formulas that most people never see, and many drivers either overpay for coverage they don't need or worse, underinsure themselves and face disaster after an accident. This video is for new drivers, families trying to cut expenses, people moving to the US, and anyone who feels overwhelmed by insurance jargon. I'll explain everything in simple, practical language with real examples you can relate to. We'll break down the different types of coverage, what full coverage really means, how insurance companies like Geico and State Farm determine your rates, and the smartest ways to reduce your premium without sacrificing protection. So if you want to stop guessing, stop overpaying, and start making confident financial decisions when it comes to your car insurance, stay with me, because this might be the most important 20 minutes you spend on your financial future. Every time you get behind the wheel, you're not just driving a car, you're taking on financial responsibility. One small accident can lead to thousands of dollars in damage. A serious crash can mean medical bills, lawsuits, and long-term financial stress. Yet millions of Americans pay their car insurance bill every month without fully understanding what they're paying for. In this video, I'm going to break down car insurance in the United States from A to Z. How it works, what coverage you really need, what affects your premium, how to save money, and the biggest mistakes that could cost you thousands. By the end of this video, you'll be able to make smarter, more confident decisions about your policy. Car insurance is a contract between you and an insurance company. You pay a monthly or annual premium, and in return, the company agrees to help pay for certain financial losses related to your vehicle, depending on your coverage. In almost every state, car insurance is legally required. If you live in places like California, Florida, or Texas, you must carry at least the minimum required liability insurance. Driving without insurance can lead to fines, license suspension, vehicle impoundment, and even legal trouble. But beyond legal requirements, car insurance exists to protect you financially from unexpected disasters. Now let's talk about the most important part, the types of coverage. The foundation of any car insurance policy is liability coverage. Liability insurance pays for damage or injuries you cause to other people in an accident. It usually has two parts: bodily injury liability and property damage liability. Bodily injury pays for medical expenses, lost wages, and legal costs if you injure someone. Property damage pays to repair or replace someone else's vehicle or property, like a fence or building. Every state sets minimum liability limits, but here's the problem. Minimum coverage is often not enough. If you cause a serious accident and your liability limit is too low, you are personally responsible for the remaining costs. Next is collision coverage. Collision pays to repair or replace your own car if it's damaged in an accident, regardless of who is at fault. If you hit another vehicle, a tree, or even flip your car, collision coverage helps cover your vehicle's repair costs minus your deductible. A deductible is the amount you agree to pay out of pocket before insurance kicks in. For example, if you have a $500 deductible and your repair costs are $3,000, you pay $500 and your insurer covers the remaining $2,500. Then there's comprehensive coverage. Comprehensive protects your car from non-collision events. This includes theft, vandalism, fire, hail damage, floods, falling objects, or hitting an animal. If a tree branch falls on your parked car during a storm, that's comprehensive. If your car gets stolen, that's comprehensive. Like collision, it also includes a deductible. You've probably heard the term full coverage. Here's the truth. Full coverage is not an official insurance term. It usually means you have liability, collision, and comprehensive coverage together. But even full coverage doesn't cover everything. It doesn't cover mechanical breakdowns, routine maintenance, or personal belongings stolen from your vehicle unless specifically added. Another important coverage is uninsured and underinsured motorist coverage. This protects you if you're hit by someone who either doesn't have insurance or doesn't have enough coverage to pay for your damages. Even though insurance is legally required, many drivers on the road are uninsured. Without this coverage, you could be stuck paying for your own injuries or vehicle damage. There's also personal injury protection, often called PIP. PIP covers medical expenses for you and your passengers, regardless of who caused the accident. Some states require PIP, especially no-fault states. In no-fault states, your own insurance pays for your injuries first, regardless of who caused the accident. Car insurance rates vary widely across the United States. The national average is around $1,500 to $2,000 per year for full coverage, but your actual cost depends on several factors. One of the biggest factors is your age. Younger drivers, especially teenagers, pay much higher premiums because statistically, they're more likely to be involved in accidents. Your driving record is another major factor. Speeding tickets, accidents, DUI convictions, all of these increase your risk profile in the eyes of insurers. The cleaner your driving record, the lower your premium. Your location also matters. Urban areas typically have higher premiums due to traffic congestion, theft rates, and accident frequency. For example, drivers in high-density states like Michigan or Florida often pay significantly more than drivers in rural states. Credit score also plays a role in most states. Insurance companies use credit-based insurance scores to predict risk. Drivers with higher credit scores often pay lower premiums because statistically they file fewer claims. Your vehicle type affects your rate too. Luxury cars, sports cars, and vehicles with expensive repair costs generally cost more to insure. A high-performance car will usually have a higher premium than a standard sedan. Insurance companies also calculate premiums differently. Major providers like Geico, State Farm, Progressive, and Allstate all use their own pricing models. That's why shopping around is so important. One company might quote you $1,800 per year, while another offers $1,300 for similar coverage. First, increase your deductible. Choosing a higher deductible lowers your monthly premium because you're agreeing to pay more out of pocket if you file a claim. However, only do this if you have enough savings to cover that deductible. Second, bundle your insurance policies. Many companies offer discounts if you combine auto and home or renter's insurance. Third, ask about discounts. Good driver discounts, good student discounts, defensive driving course discounts, military discounts. These can significantly reduce your premium. Fourth, improve your credit score. Paying bills on time and reducing debt can indirectly lower your insurance costs over time. Fifth, review your coverage annually. If you're driving an older car with low market value, it may not make sense to keep collision and comprehensive coverage. The cost of coverage might exceed the potential payout. Sixth, consider usage-based insurance programs. Many insurers offer telematics programs that track your driving habits through an app or device. Safe driving behaviors can earn discounts. Now let's talk about the biggest mistakes people make. The first mistake is choosing minimum coverage just to save money. Minimum coverage may meet legal requirements, but it may not protect your assets in a serious accident. If you own a home or have savings, you need higher liability limits. The second mistake is not understanding your policy. Many people sign up without reading the details. They don't know their deductible, coverage limits, or exclusions until they file a claim. The third mistake is failing to update the policy after life changes. If you move, buy a new car, get married, or change your driving habits, your policy should reflect that. The fourth mistake is lying on your application. Some people underestimate mileage or hide drivers in the household to lower premiums. This can lead to denied claims and policy cancellation. The fifth mistake is not comparing quotes regularly. Loyalty doesn't always pay in insurance. Companies adjust rates over time, and a competitor may offer better pricing. If you're involved in an accident, first ensure everyone's safety. Call emergency services if needed. Exchange information with the other driver, take photos, and document everything. Contact your insurance company as soon as possible to start the claims process. An adjuster will review the damage, determine coverage, and guide you through repairs or settlements. Remember, insurance is about transferring financial risk. Instead of risking tens of thousands of dollars on your own, you pay a predictable premium to protect yourself. At the end of the day, car insurance is not just a legal requirement, it's a financial safety net. The goal isn't just to find the cheapest policy. The goal is to find the right balance between protection and affordability. Understand your coverage. Know your deductibles. Compare companies. Adjust your policy as your life changes. If you take one thing away from this video, let it be this: car insurance isn't just a bill, it's protection for your future. The smartest drivers aren't the ones who pay the least. They're the ones who understand exactly what they're paying for and why. Now, I want to hear from you. How much are you currently paying for car insurance? And do you think you're getting a good deal? Let me know in the comments. And if you found this breakdown helpful, make sure to like this video and subscribe for more content that helps you make smarter financial decisions in the United States. So here's the bottom line. Car insurance is not just another monthly bill you pay and forget about. It's a financial shield that stands between you and a potentially life-changing disaster. One accident can wipe out savings, create debt, or even lead to lawsuits that follow you for years. But when you understand your coverage, choose the right limits, and compare your options wisely, you turn car insurance from a confusing expense into a powerful financial protection tool. Remember what we covered today. Know the difference between liability, collision, and comprehensive. Don't rely blindly on minimum coverage. Understand your deductible. Shop around between companies like Geico, State Farm, Progressive, and Allstate because pricing can vary more than you think. And most importantly, review your policy every single year as your life changes. The smartest drivers in America aren't the ones paying the lowest premium. They're the ones who understand exactly what they're protected against. When you take control of your insurance, you take control of your financial future. If this video helped you understand car insurance better, hit the like button so more people can see it. Comment below and tell me how much you're paying right now and whether you think you're overpaying. And if you want my next breakdown on the best car insurance companies in the US and how to choose the right one for your situation, make sure you subscribe and turn on notifications. Drive safe, stay protected, and I'll see you in the next video.